All right. Greetings, everyone. Everyone out there, if you can hear me, I'm going to kind of wait a little bit, see if we can get some people to join. And welcome to the Diamond Legacy live stream. Here tonight, we have a very special guest, Mr. Josh Cole, Realtor Extraordinaire out of Keller Williams. All right. So just hang on to your seats here. We're going to wait to see if we can get some people into the group first before we get to talking. Don't want to jump ahead of ourselves. Oh, yeah. So it's live right now. I'm about to share it. And what's good is that we have live captions too. That's good.
It's excellent.
Josh, can you hear me? Can you hear me good?
Yes, I can hear you.
All right.
Yeah, you sound clear. Your video paused a little bit.
All right, so let's go start sharing. Get some people in the group. Hello, everyone. Welcome to the live stream tonight. As promised, Diamond Legacy live stream is happening right now. Grab your seat, grab a pen, get ready. Let's get set. Hope you all are having a fantastic holiday. Merry Christmas to all. Happy Hanukkah, Kwanzaa, New Year's, all that good stuff. If you have any questions that you want to ask, right now is the time. You're looking to buy a house 2021. Now is the time to start asking questions. Pen, pad, live comments we're taking tonight. And I hope you all are doing well tonight. All right. All right, here we go. Got some live people in there. Hello, everyone. How you doing tonight? My name is Damian Ali, Mr. Credit Man himself on the line. They have my special guest, Mr. Josh Cole, Realtor
Hello, good evening, everyone.
Out of Austin, Texas. Keller Williams. All right, man. So we got a few people that's already in. We're 3 minutes into. Please like the video, share it with a loved one, all that good stuff, because there's some good information we're going to drop on here tonight. Some of the stuff that we want to talk about, getting your credit score in shape for your future, knowing the lending landscape. What does that look like? Getting pre-approved for a loan, comparing rate. Questions when it comes to reading the fine print. These are the necessary things that you're going to need to know. Then I'm going to drop on you some first-time home buyer loan programs from FHA, VA loans, USDA loans, Fannie and Freddie, Mac, of course, home renovation loans. There's all sorts of stuff out there. All right, so, all right, we got a couple folks in here. Let's get started. All right, Josh, man, how you doing tonight?
I'm doing well, Damian. How are you doing this evening?
I'm fantastic, brother. Fantastic, brother. You know, it's a good
great
thing, man. We can get together and talk about money, power, and real estate. I know that you're down there in Austin, Texas, man. How's the weather down there during the Christmas season, the holidays, man?
You know, the weather is nice. We're expecting some rain tonight and tomorrow for the rest of the week. But other than that, it's been fabulous down here in Austin, Texas.
Nice, man. Always good to hear, man. How's the real estate market going on down there, man? What's happening with that?
That is a great question. So the real estate market in Austin is really tight. It's on fire. We have people moving from California, New York, Florida. They're just buying up all the property. So inventory is low market. Of course, with the interest rate being at historic
Okay.
lows, there's also people locally that's looking to purchase. But again, that inventory is not there. So
Gotcha.
prices are increasing by the day. From the new construction communities or builders are actually increasing their prices. Usually they're decreasing their prices this time of year, but at the moment they're increasing because the inventory is not there. And then also on the supply chain, as it relates to materials, uh, the cost of lumber is at an all-time high, and we have a lumber shortage, believe it or not. So it's really wild here in Central Texas and throughout Texas, really, as far as the real estate market. So it's kind
Wow.
of scary because usually our busy season is in the springtime, but
Yeah.
in the wintertime is our slow season. But right now, the wintertime, this season, it's just
Okay.
outrageously.
Gotcha,
Um,
man. So buying a home in Texas is just like buying anywhere else. It's
you're
supply
right.
and demand, really,
It's
at
supply
the
and
end of the
demand.
day.
It's
So
supply and
that
demand.
supply and demand is really going to be really tough. We're rolling into 2021, where a lot of folks are wanting to buy homes, and uh, if the demand is just not there, I'm sorry, if the supply is just not there, it kind of makes it a really forensic type of atmosphere, quite frankly. So that's interesting, man. That even in Texas, it doesn't matter where you're at right now. You can be in Texas, you can be in California, New York, North Carolina, South Carolina. It's pretty much the same thing I'm hearing across the board. That's very
Yeah,
interesting,
yeah.
man.
And with those interest rates being at an all-time low, it's really making it very challenging,
Yeah,
to find homes in certain price ranges, especially with the first-time home buyer. You have to make yourself competitive. So it could be the type of loan, but it could be the amount of money you put down. But in the seller's market, from a buyer's perspective, you have to find a way to make yourself competitive.
and
Otherwise, you'll
and
get priced out.
and what tips would you give to a person that is looking for a home, and what is going to make them competitive? I mean, is it credit score? Is it how much money they have down? The type of loan you mentioned earlier is really, I know there's so many different types of loans out there. So depending upon your
Yeah,
situation, what really would you suggest is the best way to get your
that's
contract ahead of?
that's a great question. So starting from the beginning is obviously your credit, right? Your credit worthiness is going to determine what type of loan, what type of buying power you have. So
Right.
you're better off, honestly. I know typically most first-time homeowners, they're going the FHA route. But if you could somehow go the conventional route, you immediately make yourself competitive. And here's why. With
Yeah.
FHA, there's a lot of requirements from the FHA side that may require a property to be in a certain condition.
Right.
Um, and then from a seller side, they understand that. So when you come to me, Damien, I'm a seller, you're a buyer, and you have an FHA, and this other guy has a conventional loan. As a seller, I'm going to look at the conventional loan or cash because I know there's less scrutiny from a conventional loan. With an FHA loan, there's too many requirements that have to be met by the seller for that lender to approve the loan. So if you want to be competitive in the seller's market, honestly, if you're able to go conventional, you may have to put a little bit more money down. Or if you obviously have cash is king. But if you want to be competitive in the
Right.
seller's market,
Absolutely. I think one of the
conventional
questions that I
or cash
see
is the way to go.
that's coming in, some folks are saying the first time that they've actually been in North Carolina, that they see offers over asking for the price.
Oh
And
yeah,
that's because they have to be competitive.
Exactly. I'll just give you an example. I had a listing a week ago. I listed it on the MLS on Thursday. It went under contract on Monday. So of course I marketed the hell out of it. But anyway, I got it under contract within 5 days. Multiple offers, thousands of dollars over at the asking price. So in the seller's market, you can be able to be in a position, to put that amount of cash down and just be ready to make quick decisions as well.
Yeah, yeah. I would definitely agree with that for sure. Um, in a seller's market, um, they pretty much can ask for anything they want, really. Quite
They
frankly,
can. You're
they can.
absolutely right. The offers that I received were a little bit unique. Buyers willing to pay the title policy. That's unheard of. That's usually a seller's cost. So, but to be creative, to make themselves competitive, I had offers where the buyers were willing to pay the title policy. So,
Yeah,
and that's just a way to make the offer a little bit more, lucrative, and, a little bit more eye catching for the seller.
yeah. I know for certain that having a credit score of a 670 or higher definitely puts you in a better position than if you had a 580. A lot of folks think that I can just get through the door if I just get a 580. Or I can just get through the door with a 620. And a lot of times,
Right.
another individual that'll come in with that 670 and they have much more money to give on the lending side. And like you said, the mortgage is a lot more attractive to the seller. So they
Yeah,
feel as though the approval
absolutely.
can even go smoother when you have a higher credit score versus if you have a
That's
lower
true.
credit, right? Yeah.
You're absolutely right, Damien. You hit the nail right on the head. Now there are lenders out there that will lend money to you with a credit score as low as 540. I know lenders like that, and I don't like to have my clients go to those type of lenders because I know through the closing process, usually when someone has that low of a credit score, something could pop up later on down the line throughout the closing process of the loan, and that could just pull everything back and put everyone in a bad position. But you're right. If your credit score is not as good as you would like it to be, you could encounter some problems later on down the line as far as during the closing process. Just because you have that pre-qualification or pre-approval when you purchased a home at the beginning, you make that offer. 30 to 45 days later, when you close,
Right.
something
Exactly.
else
30 days
to pop
into
up
it,
on the credit report. The
they're going to pull your
terms of
credit
it
again.
may change. Anything happen in the
So
market.
you want to make sure
Yeah, they're
that
going to pull your credit again.
whatever challenges that you may have out there is already cleaned up before you actually even get to the table. One of the questions I'm
Absolutely.
in, we have Lee Smith, my frat brother. He's asking the question. He's saying, are you seeing the same strengths in the second vacation property market? So those individuals that have second and third homes, are the strengths in the atmosphere on the home market side of things, the purchasing side? Is it still the same kind of market?
Well, for the vacation rentals, Austin is in a unique spot. Austin has become it just depends on where you are. Austin, there's a lot of Airbnb, vacation rentals around because Austin it's become a destination city. Everyone's moving here. There's people, um, you know, doing long-term vacation rentals just because the market is just crazy right now. So it really depends on where you are in the country. Places like Charlotte,
Gotcha.
um,
Okay.
Charlotte,
So
Austin,
depending on where you're
Houston.
at,
It just
yeah, I
depends
know
on
that
where you are in the
Airbnb
country.
market is popping right now. Matter of fact,
Oh yeah,
I was out in Las Vegas, and matter of fact, Palms Apartments, they're Airbnb in the entire unit. It's crazy. So I mean, a lot of money in that Airbnb. I know a lot of people kind of stay away from that sometimes, but you can really make strong money if you have a second, third property out there that you want to get into. Those are for the individuals that already are homeowners. Your credit score is great. You're in a perfect shape to go get another property, start some investing. Airbnb, man, is awesome to do. All right, so let's talk about getting your credit in shape. I want to talk about that just really quick, briefly. I mean, not everybody can qualify for a home loan. I mean, you have to meet certain credit qualifications to ensure that you're actually going to get an actual mortgage that's going to be beneficial to help you repay that loan. So a low credit score, let me tell you what a low credit score signals to a lender. It means that you're a higher risk, quite frankly, before taking on that loan. So you don't want to have the lowest score that you can just squeak into. I get a lot of folks, sometimes they'll go to a realtor first before actually going to a specialist in order to fix your credit. To elevate your credit score, it's not just a nickel and dime thing. You don't just send a couple of letters and then hope for the best. It doesn't work that way. Equifax, TransUnion, Experian is very complicated. They know that there are millions of people out there trying to dispute their credit. So they're taking extra precautions to not move as fast, quite frankly. So when you get a specialist like Credit Smash, for instance, all right, that specialist can go in on a weekly, daily, everyday basis and work on your credit, especially when you don't have time to do so. So before jumping out there and talking with the realtor, you definitely want to make sure that you get your credit in shape. And like we were stating earlier, you want your credit score to be upwards north of 640, 650, 670. I mean, if you can get into the damn 700s, that's really where you want to get to. A lot of folks try to get to the eights and whatnot. Having a 740 credit score, I can tell you, having a 740 credit score versus an 800, there really ain't no difference. Interest rates are pretty much the same. You're not going to save more money or gain more money by having an 800 credit score versus a 740. But you will be qualified for a ton of programs, a ton. Okay, so knowing the lending landscape, there are credit unions out there that you can go to, guys. There's mortgage bankers and brokers. There's correspondent lenders out there, which is kind of like a third-party financial institutions. There are savings and loans companies out there, mutual savings banks. There's all types of different ways that you can explore in order to get that loan so that you can opt for a property. Let's talk about the pre-approval process, Josh. When it comes to pre-approvals, what are you looking for when you're as a realtor? What is a realtor looking for in that pre-approval before you go take somebody shopping?
Well, obviously knowing what their buying power is, so how much are they pre-approved for? Now, before usually there's two things. There's pre-qualification and a pre-approval. The pre-approval is what you want to. The pre-approval is what you want to have. You're further along in the process. Pre-qualification is basically what happens before you get the pre-approval. So as a realtor, I want a client that has a pre-approval. To me, that means they're ready to go. With the pre-qualification, there's still some credit worthiness and reviewing process that needs to take place. So, if you're looking to purchase a home, you want to have that pre-approval. Back to what you were saying earlier, Damien, about the credit score. Basically, the lower the credit score, the much more money is going to cost you in the long run. The higher the credit score, the cheaper the loan will be. And what I'm talking about is interest rates. Even though interest rates are at an all-time low, lenders are actually scrutinizing these applications a lot more due to the COVID situation. With coronavirus going on, they're even, scrutinizing the applications even more. Even though the rates are low, there's a higher scrutinization of the credit application now because of the COVID situation.
Right.
So
before
you apply for
I can definitely attest to that. You get a lot of folks that are being laid off, going on furloughs, all sorts of stuff that is delaying the home buying process. And I can tell you, I mean, if you're not employed right now, you probably want to work on your credit and save your money. If you're on furlough right now, you probably want to work on your credit and save your money. Waiting for the future in order to make that huge investment, there's nothing wrong with that. And a lot of people feel pressed out here nowadays, oh man, the interest rates are low and we don't know if the interest rates are going to last like that. Let me tell you something. I've seen the market go up and down plenty of times. The houses are going to definitely be there. One thing that America is not running out of is land. There is a lot of land here. So they're going to keep on building. So with that being said, though, you definitely want to make sure that you're in position to get that pre-approval. So what does it take in order to get a pre-approval? Let me tell you, right? If you have just a loan buyer, just you yourself, your social security number, they're going to pull that information and they're going to pull your credit. They're going to check your bank account, your savings account, your checking account, your investment accounts, any 401ks that you have. They're going to be looking at that. Any outstanding debt that you have on your credit, they're going to look at that in terms of what you're obligated to, like credit cards, your car loan, student loans. All right. I can tell you by far, one of the reasons why a lot of people get knocked out of buying a house is because of student loans, because they didn't consolidate them and they either went into default. If you think that it's not going to happen in terms of, you having that student loan, like it's not going to prevent you from buying a house, but it really can. So you definitely want to take a look at your credit to make sure you know what's actually out there. Also, you need to file your taxes. Taxes 2 years prior to you buying a house, they're going to look at that. Your W-2s and your 1099, they're going to look at that. Whether or not if you're a salary versus a self-employed individual, they're going to look at that. So if you're self-employed, you're talking your Schedule C's, you're going to need to have that, and then obviously the down payment, which is a huge thing. Probably, hey, Josh, anywhere from 3.5% up to 5% of whatever that is, right?
The minimum is 3.5%, and that's what an FHA loan. A conventional loan could go all the way up to 20%, but with the conventional loan is low as 5%. So the smallest amount you can put down is via an FHA loan, which is 3.5%.
Okay, excellent. All right, excellent. So let's see. Let's talk about, are there any right questions and any wrong questions that you've gotten when looking for a house, when you get that person that's ready to go? Like, what are some of the right questions a person would ask that, right off the top, they're actually going to, that this person is serious?
That's a great question, Damien. I think there isn't, from a first-time homebuyer perspective, there's really no wrong question. Most of the time, first-time homebuyers are really unaware of the complete process. So, when I'm working with my clients, I take that into consideration. You obviously don't want to make them feel small. I try to educate them as much as possible about the process, especially the financial piece of everything. With the pre-approval, what their credit worthiness is, how much money they have available to put down. I really try to focus on that part of it.
Rolling here.
Yeah, I really just try to focus on that part of it, because going out looking for a home is easy and walking through properties is easy. The hard part is making sure that the financial piece is ironclad. So that's the most important thing from a realtor's perspective, and also from a consumer perspective, is making sure they understand that their financial piece of this is ironclad and solid.
Gotcha. So ironclad and solid, people. All right, so let's check it out. Lee is asking, what is the latest 15-year interest rate and what's the 30-year rate? Do you know what the rates are right now, Josh?
Last time I checked, which was last week, they were as low as 2.75 for a purchase on a new mortgage. The refi rate was as low as 2.3. So it's fluctuating on a daily basis.
Gotcha. Okay. Those rates are pretty low. I can remember a time, man, back when I bought my first property back in 2003 or something like that. Dude, the interest rates were like 6%.
Yeah. And we thought that was like, great.
I thought that was crazy. 6%. And I thought 6% was a great loan. I thought that was a great rate. Now it's 2.7. Oof. Man, it's ridiculous.
Yeah, I mean, if you're an investor or just a homeowner or a first-time home buyer, take advantage of the environment. Obviously, we got this COVID situation going on, but in situations like this, there's always opportunity. So the opportunity now is that if you can get a loan to purchase a property, even if it's just an investment property, do it. Because 2 years from now, you may not see these interest rates. A year from now, you may not see these interest rates. You know, if they decide to raise the corporate tax back up to 35%, guess what those big house employers are going to do? They're going to take their jobs overseas. They're going to start cutting employment here in the United States. Interest rates may rise. So take advantage now if you can. If you're in a position to take advantage of the interest rates, do it now.
Absolutely. That's great advice, man. I love it, man. That's what I want to show the people, man. Take advantage of it now. The interest rates are very low. They may not last forever. So get it while it's hot right now. And our coach, man, at our group of people, of young folks that are out there, you know, if you're renting, get out of renting, man, and try to buy a house.
Yeah. Try to buy a house.
Yeah, if you don't have to stay in the house forever. I mean, you know, there's 30-year mortgages and 15-year mortgages and things of that nature. But, you know, you don't have to stay in a house for 30 years. You can purchase the house, get an investment, turn it around, rent it out, and do all sorts of things. So, you know, the way to wealth is home ownership. Make no mistake about it. There's a lot of ways to make money, but the best way is to own real estate, for sure. It's the ironclad way. How do you prefer to communicate with your clients? Via email, text, phones? Are you, in your turnaround time there in Austin, like, are you really good with the communication and the turnaround times on like the paperwork?
Absolutely. As a realtor, you have to be. I mean, there's like over 10,000 realtors in my area. You know, communicate, you know, typically do it. It depends on the demographic. You know, the younger demographics is obviously text. So usually text and emails primarily, sometimes Facebook and Instagram.
Gotcha. Hey, cool. All right. So I was kind of going in and out a little bit. Let me ask you, are there any fees that can be waived when it comes to getting into that mortgage? Or like you said, because it's so competitive, most people are not really waiving anything.
No, there's nothing that can be waived. I mean, you could sway the cost, you know, like for example, the title policy, you know, you can negotiate. Everything is always up from negotiation from the buyer and the seller side. So you can negotiate back and forth with the seller or the buyer, and you know, the seller cover this or the buyer covers that. But as far as waiving fees, I mean, I guess the only thing you can waive is the option fee. So basically, there's no option period. You know, so when you purchase a home, there's an option period. So that's where you have your inspection and you have X amount of days to pull out of the contract. So a lot of times, you know, you may see that in high dollar homes where the buyer is motivated and they just waive the option period, meaning they just want to purchase the home immediately to get the inspection, you know, waive the contingencies, and you know, have a quick close. You know, that's really the only thing from a buyer perspective that you can request to have waived.
Waive the option fee. Okay, gotcha. Okay, so great information. I did not know that.
That's not something you would.
There's all sorts of contingencies and quick closes and things of that nature that can be a benefit to you guys. So great stuff, man. Hey, listen, we only have 2 more minutes. I want to close out tonight simply thanking you, Josh, for coming on with me tonight. I know that a lot of folks are happy that you came on so that they can know a little bit more. We answered a few questions here tonight. Listen, guys, if there's any other questions that you need me to answer or need Josh to answer, Josh, I'll put your phone number in on the link here so that they can get in contact with you. Listen, if you are in Austin, you need to talk to this man, Josh Cole, Realtor Extraordinaire. This is the man to go to in Texas. He can get you done, all right? So do not delay. If you're in Austin, Dallas, Houston, wherever, right? Like I'm pretty much, you do
wherever.
homes everywhere.
I can operate all over Texas. I have resources all over Texas.
Absolutely. This man has all the resources that you need to get you in a home. So I have some clients that live in Texas. Josh, I would definitely be referring my business to you. And listen, man, I hope Godspeed to you, man. Keep on selling houses. Be the extraordinaire that you are. And listen, everyone out there, I appreciate you coming into the live stream for tonight. We enjoyed you. This is a 30-minute live stream that is coming to you from the Diamond Legacy Program, Credit Smash. And let me tell you, folks, life is great out there. Don't think anywhere any less than that. I know it's a lot of stuff happening, but you can be focused in on the negative, or you can be focused in on the positive. It's 2021, so get your credit in shape. Call me, creditsmash.net. You can always go to my online service, or you can contact me directly. You guys already know the number. I'll leave it in the chat, and I'll leave it in the group as well. But at the end of the day, home ownership, money, power, real estate. This is Damian and Josh. We're signing off. Peace, everyone. Take care.
Peace out, everyone. Take care.